Everything in this video is not intended as financial or investment advice and is for educational purposes only. I'm Josh Olszewicz, the head of research at Valkyrie, and let's look at the midweek market update. The themes for 2021 thus far have strongly been correlation to traditional markets, along with dormancy flows, which essentially means very little old coins moving on chain. And we can look at that at a variety of ways, and we will take a look at that, as well as just the general range bound nature of price currently. This is the SPX futures, NASDAQ futures, BTC, and ETH. And the correlations here are uncanny. You can measure this in a variety of mathematical calculations, but it is pretty clear that we are almost in lockstep with traditional markets still, which isn't in it of itself a problem in the moment. And over time, these correlations do decouple and recouple, but it is the prevailing narrative right now. You can see even ES, SPX, having a slightly better time at these lows than BTC. But what we really want to see here in crypto land is a decoupling, number one, and an outperformance, obviously. And typically the decoupling from legacy does indicate a risk on type of sentiment being back on the table, something which BTC historically has enjoyed price-wise. So if we talk about macro fundamentals, technicals, we got to talk about on-chain stuff. For BTC, it's always a good idea to just take a look at what's going on. What you don't want to see, this is transactions per day in the orange here. What you never want to see is a massive decline in transactions per day in the near term, right? Because this just means everyone's left, right? You're sitting there at the lunch table, still eating your apples or whatever, and everyone's gone to recess, right? And we really haven't seen that currently. Now, if we're comparing and contrasting 2018 to now, the differences here on chain, I think, are pretty stark. We did see a massive dip in transaction counts relative to mining stuff, in my opinion. The Chinese mining exodus certainly pushed this lower. But currently we're still in the range. We're not pushing lows. It doesn't look catastrophic by any means. It doesn't look like activity is going out the window. Are we rising week over week? No, but neither is price, right? And typically when you see rising price, you see rising on-chain activity hand in hand. There are divergences to that occasionally, but all this makes sense intuitively. You just get more people into the fold as price is going up. So again, not catastrophic whatsoever. Active addresses as well, declining from the highs of price, but still well within ranges. You know, we're not sitting at multi-year lows. We're not pushing all-time lows in active addresses. Active addresses being defined as the number of addresses that have changed in value from the previous day. Again, during times of blanket bullishness in price, you do see typically rises in active addresses, as we did in 2016, as we did in 2020 to early 2021. And again, you can see that drop off here, which was relative to both price and mining activity at the time. Both of those go hand in hand. And we're still well within ranges. We're sitting not too far away from all-time highs in active addresses. So even at these range lows for price, on-chain activity is still rather robust relative to market cap, which we'll take a look at in MVRV. But I think it's important to put that into context. We're not coming off of months of price rising, right? We're coming off of months of price ranging. So you're going to see, most likely in Bitcoin's case, a slight reduction in on-chain activity. Here's where it starts to get interesting and where people start to talk about dormancy flows or hodler type of metrics. Basically, is anybody moving coins? What are people doing, right? When prices are at lows and prices are at extreme lows, you typically get very emotional type of behavior. The same thing with highs. But just looking at March 2020, we saw a big spike in exchange deposits on that day. Now, this could be anybody, could be institutions, could be retail, right? But in general, when you see these spikes, typically means panic, right? We're not seeing panic at all. We've seen zero panic really since that time, as far as deposits are concerned. We're continuously seeing exchange balances get drained, essentially, and they're just sitting at lows here. They're sitting at 2018 levels. and you can discuss this as float or just coins available for sale, right? Should price get wildly bullish beyond the current range, which certainly is not an impossibility, and we'll look at the technical evidence for that, but if price goes higher on less available float, less available coin for sale, then that has the possibility of having significant momentum, right? Now, if we were mega ultra turbo bearish and we were seeing deposits rising, right, as we did in 2018, again, if we're comparing and contrasting this, it's the polar opposite. We are not seeing deposits rising. We are seeing balances getting drained over the past few weeks, really continuously since July. Now, that didn't help us per se in price in the near term, but again, on aggregate over the long term, zooming out, this does have a very positive correlative effect on price. Now here's MVRV, which is my favorite metric. Transactions are interesting to look at, active addresses, all that stuff. The more granular you get and the more you know about transactions as far as what you can do with Bitcoin or Ethereum and the Lightning Network, it gets harder and harder to really tease apart what exactly is going on, because you can do so many different things. You can batch transactions, you can send it through Lightning. So I really like MVRV because it measures market cap against on-chain activity. So against the USD values of both. If we look at the historic values for MVRV, we can see at the highs in price, at the all-time highs of price at the time, MVRV was several multiples of above historic averages. So that is to say, the market cap exceeded on-chain activity by a multiple of 10 or more several times, all of which correlated to all-time highs in price. The most recent all-time highs saw local highs in MVRV in hindsight, but did not see massive excesses in market cap relative to on-chain activity when we're talking about value. So currently, where do we sit? Well, again, on-chain activity relatively robust compared to market cap, despite a reduction in on-chain activity over the past couple of weeks. So MVRV currently sitting at multi-month lows, basically mirroring 2020. And if you treat this as an overbought and oversold oscillator, which is essentially what it is, irrespective of knowing what price was, right? The closer we get to the quote-unquote buy zone or the oversold territory, the better as sort of a bottomy indicator historically on backtesting, right? You can't predict the future, but just looking at what's happened price-wise relative to that activity certainly gets you a better idea of what's going on, and it helps illustrate where buys just really get better and better as a value perspective based on what's going on chain. So I like where MVRV sits. And now we get into the technicals, which again is just math. Let's be honest here. We're looking at price. We're looking at the left side of the chart versus the right side of the chart. And we're seeing, is there any value here? Is there any indicators? If there weren't any value here, you'd say, okay, this is a random walk. This is turtle soup is another name that it's called frequently. So do we have any evidence on backtesting of any indicators that help us? One such indicator that does seem to be valuable is the 2-year moving average and the multiplier in the red here. So the 2-year moving average in the green, multiplier in the red, again, much like MVRV, has been a pretty good oscillator for price historically since 2012, okay? You can see all of the all-time highs were painted as overbought. Even the recent all-time highs painted as very close to overbought. Now, there's some argument to be made that we won't actually get to mega oversold territory here on the oscillator because we didn't reach that hype mega bubble territory as we did twice previously. So that's certainly on your side, as well as, again, just getting closer to the buy zone, the buy area relative to what's happened historically. Does this tell you the exact low, exact bottom? No, but it does give you some sense of oversold versus overbought. So I like where this sits for BTC on a long time horizon. And looking at something like a pitchfork even, pick 3 points, you get a rate of change. Over time, these rate of changes will ideally, or at least what's happened, is they've smoothed out over time. So over time, you're going to have to adjust this, right? But since 2019, this has been the acceptable rate of change of the market, essentially, right? So the first thing is you pick 3 points, get a rate of change. And then you decide if this is real or not. Are there crazy oscillations? Are the levels respected? Does it look like it makes sense, basically? Just the sanity check here. And at the highs, we did find resistance, just as you would expect in that zone based on the pitchfork, based on the deviation from the rate of change expectation, which is this midline here. So we very well may see a skimming of this deep blue or light blue zone, right, yet to come. Now that is rising day after day, but ultimately we are the most bullish when we were up here, and we get into scary overbought territory in the near term when we are up here. And then we get into, again, like an oscillator. It's really all these are. We get into better and better buys. Not investment advice, but just historically, if we're trying to look at stuff on technicals that makes sense, this makes a lot of sense to me. So the midline for this is even at 64. So one way to read this would be, okay, if I'm buying the lows of the pitchfork, there's some reasonable expectation that we're going to, at the very least, return to that rate of change midline area. This also tells me we probably don't have that much more downside in the near term if this rate of change holds, which it has since 2019. So again, it doesn't tell you the exact bottom, but it does give you a pretty good idea of what's going on relative to what's happened over the past couple of years in this case. And that's, for crypto, that's a lot of data. That's more than most altcoins have even existed. And this has lined up pretty well. In the near term, like I said, we are in a range. This is called the Ichimoku cloud. Just helps you figure out, are we bullish, are we bearish? If we're above, we're bullish. If we're below, we're bearish in the near term on the daily timeframes. And what I'm looking for here on trend, so we are bearish, there's no denying that. But what I'm looking for on trend is a trend reversal similar to what we saw May, June, July. Now we saw continuous bullish divergence on RSI. We're not quite seeing that here, but we did see a mega low, multi-year low in RSI for BTC and ETH. Going forward in the next few weeks, leading into Q2 2022, which is where crypto loves to move in the bullish direction, historically on backtesting, is a reversal of these TK lines, these red-blue lines, another version of the moving average. This helps you gauge for weakness in bearishness on low time frames, right? And from there, you'd expect a move back to what the cloud says is the mean, or 50% retracement from high to low. In that case, is between 50 and 51, somewhere around there, K, 1,000. So that is the expected trajectory. Now that may take all of Q2, right? It may take all of Q2, 3, 4, but so long as the bottom is in, the expectation is at the very least a 50% mean reversion. And that's what the cloud is continuously painting here. And the longer we can stay bottomed, like May, June, July, the longer we can just hold at these lows. Even if we make slightly lower lows, that's not the end of the world, because that 50% level will remain largely unchanged. And that's what you want to see for strength into that area. Here's a look at that RSI again on the daily, just mega oversold. You don't see that too often on crypto specifically, or stocks in general. You know, on most things, they don't necessarily trend in oversold territory like that. So even if we were to get a lower low, it is unlikely that we make another lower low in RSI. And so if we put in a lower low in price, we probably put a bullish divergence in between RSI and price, meaning we're seeing waning bearish momentum. So this is me painting targets to the upside. If by the end of the year we go higher, which is certainly possible, it becomes more and more likely once we start to break levels of the range. Currently, I'd say, okay, we're probably range bound until we start flirting with highs again, just as we were in early 2021. And we go through periods of being range bound, being bullish, bearish, whatever. But the first thing we need to do is mean revert back to this area. Here's the yearly pivots on here as well, just to illustrate another mathematical calculation based on the previous year's highs and lows. 48K to 50K, I like that level in the near term to confirm strength or a denial of bearishness, if you will. Beyond that, it's all-time highs as far as retesting resistance. And then from there, we can use fib extensions, which is what these are, as well as yearly pivots to give us some idea of levels to look for beyond all-time high. So essentially, that's close to a 3x from here. Let's say everything goes perfect, and by the end of the year, we're out of this range to the upside, right? That's the type of trajectory that is certainly possible based on market behavior, let's say, right? Markets love the 1618 fib extension once they break a range. So if we do get lower lows, I'd watch for that bull div, and ultimately, you'd expect a mean reversion to that 50% level. In the near term, ultra low timeframes, it's really important to watch how this rising wedge plays out. What you don't want to see is something like this just puke to the bottom, right? This typically has low time frame reversal bias because it's like a plane going up and up and up. Eventually it stalls. In crypto, historically, not really the case. I talk about rising wedges, falling wedges, chart patterns with a bias one way or the other. They don't always perform like that in crypto. Certainly in legacy, it's probably more likely that wedges behave as you'd expect. Something else to watch for is, do we regain, even this longer period intra-range support at around 40? Do we flip the 4-hour 50 and 200 EMAs green? And do we hold these lows, which we should? I hope. If you are on low time frames and we break these lows, you're in trouble, right? But if you're on high time frames, long time horizon stuff, the sale just gets better and better for me, right? We get deeper and deeper into that 2-year moving average multiplier. But this volume is telling you we have a lot of history in this area. So it's unlikely that we just cut through this thing like a hot knife through butter before having some activity ahead of time. So I like where this stands. I like the recovery for BTC over the past week. From a technical perspective, from on-chain perspective as well, things are looking interesting based on MVRV. And, we can look at ETH. In ETH, really, the on-chain activity, for me, looks even better than BTC, which is why it's a bit perplexing why even ETH is still turning down here. This is transactions per day for ETH, which are still sitting above the 2018 all-time highs. We're seeing all sorts of stuff going on with ETH, DeFi, NFTs, fees staying relatively high still. So looking at on-chain activity for ETH, you'd have no idea this was a bear market. Sure, transactions are down slightly from all-time highs in price, but in general, looking back, zooming out, ETH is doing phenomenally well on-chain when you're looking at activity. When you look at active addresses, it's also very similar, holding near the previous all-time highs, down slightly from all-time highs in price currently, but we're not seeing just crazy range lows, right? We're not seeing continuous lows beyond what we saw in late 2021. So none of this is painting a bearish picture whatsoever. Balances on exchanges for ETH continually just pushing lows again, flattening out. Again, not something you see. This is typically inverted. This was 2017 when exchange balances went to ICOs, basically. That's my read on this. And as that topped, exchange balances came back home from ICOs as ICO treasuries deposited, and you see that inversion in price. So what you don't want to see going forward through 2022 is exchange balances picking up. And we haven't seen that since basically the COVID lows, right? From the COVID lows, exchange balances relatively flat. And then from September 2020 to present, exchange balances have only continued to make lows. Something else of note is the ETH 2.0 staking wallet, which is continually gaining more and more ETH, 9.26 million ETH currently, which is a massive percentage of circulating supply, just continually sucking that up over time, taking it out of the pool of tradable ETH in the near term. ETH's MVRV as well, also in extreme lower bound territory, not in bear market lows, not in extended oversold areas, but getting to look like a better and better buy zone area historically based on this metric, which doesn't perform as well as BTC's MVRV, but has some correlations I think that hold up strong enough that it's worth paying attention to. And looking at ETH's 1-year MA multiplier, ETH is already in the buy zone as far as this indicator is concerned. The green here is the 1-year MA. And I think it's important to look at both BTC and ETH, even if you're just paying attention to BTC, because as sort of the leaders of the market, they do slightly different things, but collectively, I think they give you a good overview of what's going on. So ETH is dipping into its oversold territory based on the 1-year MA currently. So again, it doesn't give you exact bottoms, doesn't tell you, right, buy here, trader, or whatever, but it does give you a relative idea of what's going on based on the prior year's trading history. So I do like where this sits, relative to the highs, certainly. If we look at ETH's cloud, again, very similar to BTC, you're looking for this TK crisscross. You need to look no further than June, July when this happened. And ETH's 50% mean reversion would be 3550 based on the cloud. And the trajectory would be similar, maybe not as quick. I think stuff like this is crazy to see in any market, let alone something with this market cap, where you just see day over day over day over day over day of green, 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 green. Certainly a possible trajectory, but not something I'd expect as quickly, maybe. But I would continue to watch this just like BTC relative to on-chain activity. Something else to watch for here is ETH loves to have this parabolic puke to the downside, this cascade, as things like DeFi unwind or leverage unwinds, all sorts of reasons. So as we see strength against that, above that, then we start to see confidence come back price-wise as well. So it's hard to deny that this looks decent. This could double to a bottom, right? This could do a lot of things, but it certainly doesn't look like it's going to make lower lows in the near term anyway. And then looking at ETH, again, RSI, mega all-time lows, well, relative all-time lows, let's say, multi-year lows on RSI. Here are the yearly pivots again. And measuring this to the upside, somewhere between 7 and 8K, certainly reasonable. Should this recovery continue to some degree beyond all-time high. But things look good where we sit currently. And on low time frames on the 4-hour, seeing stuff like this Adam and Eve recovery, this ascending triangle, whatever you want to call it, this could reverse the moment this video goes live, whatever, but this is a hint that we're starting to see strength slowly come back. You see this volume descending profile with this kind of nasty looking chart pattern, but it's undeniably VU recovery, breaking range highs. And again, on the 4-hour, much like BTC, you want to see that 5,200 crisscross again to assume bullishness based on trend on that time frame. Lastly, I'll just talk about DeFi. This is the DeFi perp from FTX. It is a weighted index of a lot of DeFi coins, uni, comp. It's all by market cap. And even this did not break lower lows from May. RSI actually hit an all-time low based on when this started trading. And you can see the volume come in here at these lows, again, representing typically emotion, fear, stuff like that. And that's what you want to see if you think a bottom is in for a market. You want to see emotions. You want to see someone care that price is going lower. You don't want to see somebody lose money necessarily, but it does indicate that a lot of individuals or entities hit their tipping point on price and pushed it to where it went. So mean reversion for DeFi is actually on this index somewhere around 10K. You can see the 200-day moving averages up there as well, the 10K level based on the mean essentially of the volume of the range. So everything's still range bound. I don't think that's going to change in the near term, but everything looks well on its way to a slow but steady bullish recovery. That's all I have for this one. What'd you like? What'd you hate? What'd I miss? Let me know in the comments below, and happy trading.